Brace yourselves. The U.S.-China trade war just hit DEFCON 1. Beijing has dropped an economic bombshell, escalating tariffs on all U.S. goods from 34% to a crippling 84%. That's not a typo. This isn't just a warning shot. It's a direct hit aimed straight at the heart of American business and potentially your wallet. Financial markets are already in free fall. But the tariffs are only part of the story. China is simultaneously taking the U.S. to the WTO, blacklisting American companies, and making moves to rally other nations against Washington. Why this sudden, drastic escalation? What does China really want? And is the Trump administration walking blindly into an economic catastrophe? Stay right here as we unpack the devastating details, expose the high-stakes power plays, and reveal why this could be the tipping point for the global economy. You cannot afford to ignore this. A significant development has occurred in the ongoing trade dispute. China's finance ministry confirmed a drastic increase in tariffs levied on all United States goods entering the country. The rate has escalated from 34% to a substantial 84%. This action represents a considerable impact on U.S. companies seeking access to the large Chinese market. This tariff increase is anticipated to generate significant repercussions within financial markets, especially impacting the United States. Additionally, the official statement confirmed Beijing's intention to bring a case against the Trump administration before the World Trade Organization. Indications suggest that further retaliatory actions could be forthcoming. The Chinese government maintains a firm stance, having previously stated that resolute countermeasures would be enacted should former President Donald Trump fulfill his pledge to raise U.S. tariffs on Chinese goods. The subsequent actions by the Trump administration remain uncertain. Over recent days, sources associated with the Chinese government have asserted that the Trump administration has demonstrated no willingness to engage in negotiations. Reports originating from state-affiliated media platforms suggest a critical view from Beijing regarding nations directly appealing to Washington for tariff exemptions. The interpretation presented is that such appeals reinforce a strategy attributed to Donald Trump, aimed at negotiating with countries on an individual basis. This approach is contrasted with Beijing's stated preference for multilateral trade frameworks, characterized by universally applicable rules. This perspective might resonate particularly with developing Southeast Asian nations such as Laos, Cambodia, and Vietnam, which have themselves been significantly impacted by U.S. tariffs. Notably, President Xi Jinping remarked during a meeting that China must intensify its trade relations with these specific neighboring countries. This indicates an effort to leverage regional trade amidst the broader trade disruptions initiated by the Trump administration. The announcement had an immediate and pronounced effect on financial markets. The German DAX index experienced a sharp decline, visible in real-time data. Concurrently, reports from Reuters indicated that U.S. stock index futures registered a significant downturn following the release of China's additional tariff measures on U.S. goods. This is a rapidly developing situation. The economic interdependence between the United States and China is substantial, involving vast volumes of trade. This relationship involves complex supply chains where manufacturers in both nations utilize components originating from the other. Therefore, the imposition of tariffs by one country inevitably affects its own domestic manufacturing base by increasing the cost of necessary inputs. For instance, American-made products, including automobiles, frequently incorporate components sourced from China. Increased tariffs on these components directly raise production costs for U.S. car manufacturers and other industries. This interconnectedness accounts for the widespread global economic repercussions resulting from the tariff escalations. The latest responsive measures announced by China have heightened concerns among financial analysts and economists, many of whom characterize the ongoing trade conflict as potentially disastrous for the stability and growth of the global economy. Additional reports detail actions taken by China's Ministry of Commerce. Specifically, 6 entities based in the United States have been designated on the Unreliable Entity List. Furthermore, the ministry has added 12 U.S. entities to its Export Control List. These designations mirror previous actions taken during trade disputes. These actions parallel previous measures. When the 34% tariff was previously imposed on U.S. goods, China also added several companies to its Unreliable Entity List. Typically, inclusion on this list is associated with entities involved in trade related to Taiwan or Hong Kong or other activities deemed unfavorable by Beijing. Placement on the list effectively prevents these entities from trading within China. Individuals associated with listed companies could face sanctions from Beijing if they attempt commercial activities with China. Given the trade imbalance, with significantly more Chinese goods exported to the U.S. than vice versa, China cannot precisely match the total value of U.S. tariffs. Consequently, Beijing employs a strategy of selectively targeting specific sectors. These targets are chosen for their potential to inflict significant economic impact on the U.S., particularly affecting regions considered important to Donald Trump's political base. The agricultural sector was a primary target in previous retaliatory measures for this reason. Further actions targeting the agricultural sector are considered possible. Reports circulating via state-affiliated media suggest the Chinese government may contemplate additional restrictions on U.S. agricultural imports. While such measures were not included in the most recently announced actions, they remain a potential future response. Therefore, China possesses additional retaliatory options should the Trump administration escalate tariffs further beyond the stated minimums on Chinese goods. A key distinction between China and many other nations facing U.S. tariffs is China's large, resilient economy and substantial domestic market. The Chinese government has expressed confidence in its ability to withstand the economic pressure. This economic scale contrasts sharply with smaller economies, such as those in Southeast Asia heavily impacted by tariffs, making direct economic coercion by Washington against Beijing more challenging. Furthermore, other countries may observe Beijing's firm position against the Trump administration. There is speculation that China's stance could garner political goodwill in certain regions. This resistance might also foster opportunities for increased trade with nations seeking alternatives, potentially compensating Chinese companies for reduced sales volumes to the U.S. market. So the gloves are well and truly off. An 84% tariff wall, targeted blacklisting of U.S. firms, strategic maneuvering with neighboring countries. China isn't just retaliating, it's deploying a full-spectrum economic counteroffensive. We've seen how deeply intertwined the U.S. and Chinese economies are, meaning this pain radiates outwards, hitting supply chains, manufacturers, and potentially consumers everywhere. Beijing believes it can withstand the pressure, leveraging its massive domestic market and aiming its retaliatory strikes where they hurt Trump politically the most. The big questions remain. What will be Washington's next move? Can negotiation even happen at this point? Or are we locked into a destructive spiral with potentially disastrous consequences for global stability? This is far more than just a trade dispute. It's a fundamental reshaping of global economic power. What do you think will happen next? Is China playing a winning hand? Let us know your thoughts in the comments below. If you found this analysis critical, hit that like button, subscribe for ongoing coverage of this economic showdown, and ring the bell so you're the first to know when the next move is made. The situation is volatile, and the stakes couldn't be higher.